This strategy, which was shared recently on YouTube, made approximately 59,000 rupees in 2026 using just one Nifty Futures lot. No RSI, no MACD, no moving averages, no option chain, no AI, no complicated setup, just one candle. And when I first saw the 2026 result, I was genuinely interested. But the real question is, can it do it again? So let's go back and see what happens in 2025. And if 2025 also works, we'll go back to 2024. And if that works too, we'll keep going further back. Let's start with the strategy is based on the first 1 hour candle of Nifty. That's the candle from 9:15 to 10:15. We mark the high and low of that candle. Then we wait. If price moves above the high, takes out that liquidity and then closes back inside the range, we look for a short trade. If price moves below the low, takes out that liquidity and then closes back inside the range, we look for a long trade. Entry is taken on the next candle open. Stop loss is triggered only when a 1 hour candle closes beyond the sweep candle. And the target is either 1 to 2 risk reward or the opposite side of the first hour range, whichever comes first. For this backtest, I assumed Nifty Futures, lot size 65, margin requirement approximately 2 lakh rupees. Now let's look at the result. Let's start with the period that got my attention, 2026. Using one Nifty Futures lot, the strategy made approximately 59,000 rupees. On a 2 lakh margin, that's around 29.6%. The profit factor was 1.84, which means for every 100 rupees lost, the strategy made 184 rupees. The win rate was 52.5%. So, unlike many trend following systems, this one actually won slightly more than it lost in 2026. The average winning trade was about 1.66 times the average losing trade. And the maximum drawdown during this period was approximately 15,500 rupees. So for 2026 alone, the numbers looked genuinely strong. But 2026 is only one period. So naturally, the next question is simple. Could it do it again? Now let's add 2024 and 2025. And this is where the story becomes more balanced. Across 2024 and 2025, the strategy lost approximately 17,800 rupees. Profit factor dropped to 0.95. Win rate was 38.8%. Average winner was still larger than average loser, about 1.49 times. But that was not enough. The maximum drawdown in this period was around 61,000 rupees. That's more than 30% drawdown on a 2 lakh margin assumption. So 2024 and 2025 were not terrible, but they were not good either. The strategy was very close to break even, but slightly negative. Now we have a very interesting situation. 2026 looks strong. 2024 and 2025 are weak. So we need to go further back. Let's look at 2022 and 2023. Same rules, same execution, same setup. No filters, no optimization. Across 2022 and 2023, the strategy made approximately 3,500 rupees. So technically, it was profitable, but only slightly. Profit factor was 1.01, win rate was 38.4%, maximum drawdown was around 26,000 rupees. This is not a bad result, but it is also not strong. It basically tells us that during 2022 and 2023, the strategy was almost break even. Not a disaster, not exciting, just flat. So now we have three very different buckets. 2026, strong. 2024 and 2025, slightly negative. 2022 and 2023, almost break even. Now let's put everything together. Let's look at the full scorecard. 2026. Profit of approximately 59,000 rupees. Profit factor 1.84. Win rate 52.5%. 59 trades. 2024 and 2025. Loss of approximately 17,800 rupees. Profit factor 0.95. Win rate 38.8%. 258 trades. 2022 and 2023. Profit of approximately 3,500 rupees. Profit factor 1.01. Win rate 38.4%. 271 trades. And now the total. Across the full test, 588 trades. Total profit approximately 44,900 rupees. Profit factor 1.07. Win rate 40%. Maximum drawdown approximately 61,000 rupees. So the full picture is very clear. The strategy made money overall, but most of the real performance came from 2026. Without 2026, this strategy would look very average. And that's an important point, because one strong period can make a strategy look better than it really is. So, would I trade this strategy tomorrow? Not yet. And the reason is not that the strategy lost money. It didn't. The full backtest is positive, but the edge is still thin. A profit factor of 1.07 does not leave much room for error. Slippage, brokerage, revised STT charges, execution differences, a slightly different futures price. All of these can reduce the edge. Also, the period-wise results are not consistent. 2026 is strong, but 2024 and 2025 are negative. 2022 and 2023 are almost break-even. That tells me the strategy may be highly dependent on market conditions. The most interesting part is the long versus short split. Across the full test, short trades made approximately 71,700 rupees. Long trades lost approximately 26,900 rupees. That means the short side carried the strategy. And that is exactly where the next layer of research should begin. If I were taking this strategy forward, I would not immediately start trading it. I would first test 4 things. First, long trades versus short trades. Because the full data suggests that shorts are doing much better than longs. Second, market regime. Does this work better in trending markets or during sideways markets? Third, opening range size. Maybe the strategy works only when the first hour range is neither too small nor too large. And fourth, exit logic. Because sometimes a decent entry is hidden inside an average strategy. The entry may have value, but the exit rules may need improvement. So my final conclusion is simple. Is the strategy interesting? Yes. Did it perform well in 2026? Yes. Did it prove itself across all periods? Not yet. Would I trade it blindly? No. Would I continue researching it? Definitely. Comment below if you want Pine script that you can use in TradingView and test on Bank Nifty. The result of Bank Nifty might impress you.